Very good morning, friends. So, I hope you're all doing safe as well as healthy. Well, in this particular month, as well as in the previous month, I have been talking in terms of various aspects of India's 12. And we are discussing the step number 3. And in terms of step number 3, when you're considering the recognition of a deferred tax, I'm typically talking in terms of a DTA. There is a requirement in terms of India's 12 that when you create a deferred tax asset, we need to prove that there is a reasonable certainty that future taxable income will be earned by the company. This is in simple words called the concept of prudence, what I call COP. That means unless and until a company is able to prove that there is going to be a reasonable certainty that it is going to earn a taxable income in the future, you cannot recognize a DTA. Just in case to remind you that when you're creating a DTL, there are no preconditions for creating a deferred tax liability. But when you're creating a DTA, this is the precondition which needs to be met. So the question now comes to the mind is, how would an entity make an assessment that the COP, that is the concept of prudence, is present? India's 12 gives us, you can say indirectly, a 3-step model. So we want to make a walkthrough on what is this 3-step model, how do you make an assessment whether a reasonable certainty is present or not. Let's find this out in this video, the COP. CA फाइनल के अंदर जो बच्चे नवंबर 22 की अपनी तैयारी कर रहे हैं, मेरे ख्याल में इस वक्त उनकी तैयारी भी जोरों शोरों में चल रही होगी। आपकी इस तैयारी को एक और पुश देने के लिए अनअकैडमी पर आप ज्वाइन कर सकते हैं फ्री प्रैक्टिस सेशंस। और ये फ्री प्रैक्टिस सेशंस हैं फाइनेंशियल रिपोर्टिंग के पेपर को लेके, जिसमें आरटीपी सीरीज के अंदर सीए फाइनल में इंस्टीट्यूट ने जितने भी आरटीपीज अभी तक रिलीज किए हैं फ्रॉम मई 18 ऑनवर्ड्स टिल जो आपका नवंबर 22 के लिए रिलीज किया जाएगा, हम उन सभी आरटीपीज को आपके साथ कवर करेंगे। इन सेशंस को आप ज्वाइन कर सकते हैं मंडे, वेडनेसडे और फ्राइडे 10:30 AM इन द मॉर्निंग। जी हाँ, 10:30 AM इन द मॉर्निंग आप MWF के अंदर ये सीरीज ज्वाइन कर सकते हैं। डिस्क्रिप्शन बॉक्स के अंदर आपको इन क्लासेस के लिंक्स मिल जाएंगे। यदि आप अनअकैडमी प्लेटफॉर्म पर नए हैं तो आप इन सेशंस को एक्सेस कर सकते हैं, मेरा कोड इस्तेमाल कर सकते हैं CAKB10 एंड आप इन सेशंस को एब्सोल्युटली फ्री वॉच कर सकते हैं, लाइव अटेंड कर सकते हैं और रिकॉर्डिंग भी देख सकते हैं। तो भाई किस बात का इंतजार है, आइए लेट्स क्रैक इट। As I just made a mention that India's 12 talks about the concept of prudence being evaluated under a 3-step model. Now remember, this 3-step model is supposed to be a sequential application of steps. That means I would first of all evaluate the step number 1, then I'll go to step number 2, and then I'll go to step number 3. So let's have a look at what is the step number 1. The requirement in the index is that you need to study the reversal pattern of a DTL and the reversal pattern of a DTA. Now, why do I need to do that? I think let's first of all focus on one point, that when you create a DTL, well, let's look at a journal entry. The entry is profit and loss account debit to DTL, which means when you create a deferred tax liability, you give a debit to the profit and loss account. But when there is a reversal of a DTL, you put the entry DTL to P&L. So reversal of a DTL, you can say, creates a future taxable income. Similarly, if you look at a DTA, when you create a DTA, the entry is DTA to profit and loss account. That means it gives a credit to the P&L at the time of creation, and when you reverse a DTA, the entry is P&L account debit to DTA. So one thing is very simple and straight, that a reversal of a DTL gives a credit to the P&L, and the reversal of a DTA requires a debit to the P&L. So you need to see the reversal of a DTL, what is the income created in the future, and a reversal of a DTA, what is the amount of income required for the future. So the company would make a reversal pattern. That means sit down at the end of the balance sheet date, create a chart that what is the reversal of DTL, how much income is going to get generated in the future, and a reversal of a DTA, what is the income required in the future, make a one-to-one comparison, and then decide the amount of DTA which can be created. Now, how do we do this? We're going to see a practical illustration in the next video on this. Now, let's say, for example, once an entity applies the step number 1, then it is able to recognize the entire DTA. There is no need to go to step number 2 or 3. But let's say, for example, the quantum of DTA required to be created is, let's say, 1 lakh. But the reversal of a DTL would generate an income, let's say, only to the extent of 70,000. So we need another 30,000 of future taxable income. For that purpose, we go to the step number 2. The step number 2 is an evaluation of, looking into whether there is a reasonable certainty present in the company that future income will be generated. Now, this is based on a judgment. Looking at the circumstances of the company, the auditor would make an assessment whether there is a reasonable certainty that future income will be generated. And let's say even if this falls short. So let's say, for example, when you were looking at 1 lakh of DTA to be created, 70,000 could be created because of step 1, and let's say another 20,000 is created because of step 2. There is another shortfall of 10,000 rupees, and for that purpose, the company moves on to the step number 3, where you would start looking into tax planning opportunities which might be available in the future that would create a taxable income. Now, that is again something which is very, subjective indeed, that you start digging into what kind of tax planning opportunities are available to the company which could create a taxable income. But all said and done, we can say the main exercise is the step number 1, wherein you need to consider the reversal pattern of a DTL and the reversal pattern of a DTA, make a one-to-one comparison. Then if this is insufficient, you go to the step number 2 and start looking into the reasonable certainty presence. And if that is also insufficient, then you start digging into the tax planning opportunities in the company which could create a taxable income. So we're going to take a practical illustration on this in the next video with you, where we're going to specifically have a look at this 3-step model, how the concept of prudence is evaluated for creation of a DTA. That's all in this particular video. Thank you for watching. Bye-bye and take care.